All righty. Good morning, everybody. Just getting my chart set up over here. Get my chart shared over here on this page real quick. And we'll get a rocking for the day. Happy Thursday, everybody. Got 2 more intraday sessions left before the weekend gets here. So let's see what we got. As far as today goes, we've got our weekly unemployment claims for the buck here in the States, where they are projected 3,000 more more unemployment claims compared to this time last week. So that is the one red folder event that we have scheduled. We do have a medium impact event a little later on this morning. Christine Lagarde over in the Eurozone, going to flap her lips. Coming up at 11 a.m. Central Time, that is. Annual Global Risk Lecture, hosted by Johns Hopkins University in Bologna, however you want to say that. I never did like bologna. And I'm talking about the meat, guys. Grew up, Daddy was eating bologna sandwiches. It was like a Southern thing. Fried up in a skillet, fried bologna sandwiches. You guys ever had that? That's probably the only way I could personally enjoy it with as far as being fried, but just straight out of the fridge, cold, clammy meat. Ugh. I didn't care for it. Morning, Zambezi. So yeah, that's the one. I'll eat about anything, but when it comes to bologna, just never cared for it. Anybody with me on that? Or do you guys like bologna? It's I don't know. It's made just like the same way hot dogs are made. It's kind of through a grinder and a processor. But I don't know. I just never could stomach bologna. So anyway, wow, guys, here in the States, here in Kansas, where I'm at, it's been off and on raining for the last 3 days. So it's awesome to see. That tells me that our spring weather here is starting to close in a little bit. As far as I can tell, no more freezing days or nights on the map, on the weather map, the weather forecast. So I'm happy about that. I despise of the winter. I don't like it at all. We do get all 4 seasons here in Kansas very prominently. It's a very prominent winter, spring, summer, fall. So it is nice. It's nice to see the colors at the end of the year. It's nice to get a little bit of chill, a little bit of snow. But after that one snow, I'm done with the winter. I'm ready for spring. So spring's coming. Baseball is here. That's my favorite sport, guys. I grew up playing baseball my whole life. Hello, Thedo. How you doing, Thedo? But so yeah, this is like a national holiday for me when baseball starts. The World Baseball Classic starts today, guys. For anybody that's a baseball fan, a World Baseball fan, I do believe there's 16 teams in the tournament. And so yeah, that all starts today. I'm excited about that. Later on this afternoon, while I'm sitting on my hands from the trades I'm in, I'm just going to be probably popping back watching the games. So that's it. That's always an exciting time. But anyway, looking back to the charts again, all we have today, the unemployment claims for the dollar. Other than that, got a bunch of light impact events up here. Let me see. You had the Swiss unemployment rate that came out earlier. They did have a 0.1% increase. So a little bit on the bearish side for the Swissy as an individual currency. Italian retail sales came out pretty nice, actually. Looking at the Eurozone here, a lighter impact event for the Eurozone a few hours ago, 0.6% compared to a forecast of minus 0.1. And the previous was minus 0.8. So that's a very nice number for Italy, which is obviously a little bit of a indirect result of help for the euro. So what we got, Zambezi? We have a product in Africa called Paloni that I assume must be the same When you were a student, petrol station hot chips and polony was an awesome meal. Yeah, you gotta be careful with some of that gas station food. At least here in the States. Now, I can't vouch for any other country. I can vouch for Mexico because I did live in Mexico back in 2012 for a while. So yeah, it's a little sketchy here because it's not really made with a lot of love. It's just made for a quick bite for somebody. So it's not really, you know, it's just a quick push out. But the street side tacos in Mexico, guys, that was the best. That was the best ever. And my wife at the time, she's from Mexico. She freaked out when she heard I went by myself buying street food, street vendor food, because I just thought I was gonna get sick. Because they always say don't drink the water when you're on the streets of Mexico. And I did one time actually before I really understood the danger of it. I had gotten some horchata water, really sweet, like rice water, rice milk, however you want to call it. It's got cinnamon in it, sugar. I had that one time on the street and never had any issue with it. In fact, the only time I ever got sick in Mexico, the only time was when I visited an Italian restaurant because I had gotten a lasagna and I had them pour some Alfredo sauce on top of the lasagna because that was the way I'd heard it from a Mexican friend I had here in the States before I ever went to Mexico. And anyway, I started getting that whenever I'd visit an Italian restaurant. And we visited a place called Italiani's, really good Italian restaurant. And I got sick from it just because of the heaviness of the cream. It was just like too much for me. But other than that, the street food, the chapulines, if you guys have ever heard of chapulines, you'll have to look that up. Just Google image this right here. I'm going to put it in the chat. Chapulines. Yeah. Just go Google image that, chapulines, and you'll see one of the things I had. It's a delicacy there. It might creep you out, might freak you out, but I tell you what, it tasted like barbecue chips. So that'll be your homework. That'll be your assignment for this morning. Go Google search chapulines. And then report back to me your thoughts. But anyway, I am still in the euro pound trade. It's just kind of being a mule, to be quite honest with you. Here it is right here. Okay. The basis of this, guys, just as a refresher, was the demand zone confluences I saw down here in this area back from the middle of February, where we had that big spike out. So daily, going to the daily time frame, was looking at this indecision candle, really hard spike out that left a really nice gap on a daily. I looked at a couple zones on the smaller time frames, including up here where we had this 4 hour. As you see, we chewed through the 4 hour, but we did kind of slam on the brakes at the lower end of this swing low. So I was looking at a little more specific, the 1 hour demand at the bottom of the daily demand zone. Okay, just a quick refresher. Talking about this red candle here. Excuse me. Because it's it was the lowest zone on this swing low, or on this curve analysis, looking from swing low to swing high. This was the lowest demand with a gap, and the gap wasn't that strong when we're looking at it on a 1 hour. Okay, there's our gap right there. It's very tiny, as you can see. So there's really a couple things in hindsight, as far as doing an autopsy, guys. Whenever we have a loss in trading, it's always good to go back and do an autopsy. Okay, go back and see what went wrong, see how the trade died. Right. So anyway, the things that could potentially, contribute to this potential loss, I'm not saying it's going to lose, but it's still hanging on for dear life, is the fact that, we didn't really have that strong of a gap coming out. And I didn't even quite draw that the right way, I don't think. So very little gap. And also, if you look at the volume spread analysis candles underneath, here, I'm trying to get that accurate, a little more accurate. There's our gap up here. Well, that's our 1 hour gap up here, but more specifically down here. There. Trying to get that accurate. But anyway, and also if we take a look at the volume spread analysis underneath, it really wasn't the greatest, I got to say. See, if we're taking a look at that same 1 hour candle, looking at the candles below, they're blue. That's not a very good looking batch of trading activity, if you ask me. Okay, but the things that helped me, that gave me a reason to buy. Again, we had all of our moving averages working out, our RSI. We had the strong push away from price. It is the origin of an overall strong move up. So that was and also Edge Finder gave me a bullish 6 when this report came out, a bullish 6 score. Okay, so it was given a nice score that matched up with the technicals, and then it has since just lost 1 point. So we're still hanging on for dear life at +5, guys. So overall, it's got just enough to be giving me bullish signals. The unemployment rate is a better score for the euro over the pound. So is the CPI. So is the consumer confidence. Both sets of purchasing managers index numbers, the gross domestic product, as well as the seasonality over the last 10 years is typically bullish for the euro pound. So that's kind of the reasons why. And there was really only one item on this list that didn't favor the trade, and that was the trend. Okay, so it's really the trend. Talking about moving average crossovers, certain moving average crossovers that they use in their formula. And also, if you take a step back, look at this 4-hour chart, you got higher highs and higher lows. But remember, this one actually broke structure to the downside. So the whole point of this trade is to drop below this area here where the buyers kind of stepped in and pushed price back up for a while. Okay, talking about this swing low, this swing low, this swing low. Okay, there's stop losses in this area. And I suspect that's why it's, that's adding to the reasons why price just kind of stopped in this area. So you got all these unfilled orders over here, but then you also have and by the way, these are sell orders, right? Because these buyers right here stepping in and pushing price up. So these are sell orders that are contributing to liquidity for the buy side, for the bigger banks, the institutions that might be looking to buy in this higher time frame demand zone, and not to mention the unfilled orders from the zones themselves. So, yeah, that's the basis for this trade. And all I can do is just put a stop loss underneath here, which I have it at 675, by the way, 0.675. So, oh, come on. Yeah, right about there. That's where my stop loss is. And there's nothing to do but just sit back, relax, and let it do its thing. Okay. If I start getting in here on smaller time frames and looking at smaller areas, then it'll start creating reasons why I should probably bring my stop loss up and potentially take away some losses. So I'm just going to stay away from it. Now, if we break this demand zone and take my small loss, and then at that point, where's the next higher time frame zone? It's down here, obviously. Okay, there's a little bit of a 4-hour there, but when you look at that leg out candle, the VSA candle at the very bottom, it's a blue candle. That means there's not that much trading activity. So, perhaps that wouldn't be enough for me to catch a bid. Now, down here, it's a different story. Let's go to a daily. What's it look like on a daily chart down here? Yeah, I mean, it's a clear swing low. But if I can't really look at this as a daily demand as far as this red candle, because we did bounce into right here. We wicked in on this daily candle here that ultimately became an expanded range candle. So we dipped in with that tiny wick. Okay. So red candle, consolidation. Green candle would, be a leg out, even though it didn't give us a gap. Again, the wick on that expanded range candle tapped in. So that would take away any potential daily unfilled orders. So that's not an area of interest because it's already been mitigated, right? So that's just kind of a, look at that. Obviously, I'm going to delete that since it's not giving me a good zone. But yeah, just going back down once again to the 4-hour, let's see what the 4-hour looks like. Now, the 4-hour looks a lot better. Talking about this green candle here, if we wrap a rectangle around that for another demand zone, and obviously I would make this one green because it's 4-hour or less. That's just the way I color coordinate it. You guys know this. But this gives me a much better looking picture because not only do I have a gap from here to here, showing that demand heavily exceeded supply. Okay. Here's our gap. But that leg out candle, that big green candle, look at the volume spread analysis. See, that right there paints a better picture as far as the next potential spot to get a bounce upwards if price were to drop down that far. Okay. Institutional activity stepped in, pushed price up, broke structures along the way, and kept going ultimately. So that would be the next, again, if we fail where we're at currently, that I would just expect price to go down to that level. That would be my expectation. So, but when you have a strong score saying to go out and buy this thing, that to me looks like the best spot right now. And I still stand by it. I mean, yeah, yesterday's candle didn't really give us a whole lot of help. We did have a green candle, but we closed with a bigger wick above than we did below. And in fact, if we look at the range of that candle, looks to me like we closed below the 50%. Right? So just looking at kind of a technical look on it, it's not really painting the best picture right now. Swing low on this candle, swing high on this candle. You see our 50% line. Well, we closed below it. Okay. We closed closer to the bottom than we did to the top. So that's a bearish candle, even though it's a green candle. Does that make sense? Hopefully that makes sense to you guys. So that's the current candle that we have to work off of. So yeah, I would say my, my confidence score on this actually working out before the end of intraday session tomorrow, probably 50-50. 50-50. That would be how I would quantify it. But yeah, there's nothing for me to do, guys. I got to stay away from it. I have to trust my system. I have to trust my zones. I don't want to close it early. I'm going to, by the end of intraday tomorrow, probably we'll close it because I don't want to be going into the weekend holding a trade, no matter how good it looks. Okay. And especially one that's just been chilling here sideways like it has been. If I go to a 1 hour chart, I mean, ultimately, guys, this is what? This is Tuesday, this is Wednesday, and then this is so far Thursday. So it's basically, about 2.5 days it's been chilling down here in a 20 pip range. Swing low, swing high. So that's 27 pips. So it's basically just been going straight sideways in about a 25 to 30 pip range. So, if this works out, then I could see, okay, a little bit of accumulation, a little more accumulation, a little more accumulation, a little more accumulation. Could that be all we're doing is just kind of coiling up here at the bottom after this strong downtrend, this down move? Could we just be accumulating a little, accumulate, only to turn around and break this resistance and then continue upwards? That's kind of the way I'm looking at it right now. I don't know that, but that's the way it's kind of shaping up. So yeah, we're just going to let it do its thing. Let it do its thing. Okay, that was the euro pound. I had a couple other alerts hit yesterday. Dollar yen was looking at two zones. So I was watching this zone first, but I never got a really good signal to get in. And not only that, if I'm just looking at this smaller time frame, this 1 hour time frame, that's a little higher up on the scale than I prefer to enter, which is ultimately why I stayed out of this. See, we're in the red zone. We're in the middle third of zone of this swing low, swing high. So we're diddling in the middle, right? Right. This is the retail chop zone. So you can see we got the initial bounce off of the zone and pushed up, but it just turned around and kept going. So yeah, like I said, even if a zone doesn't work out, you'll still typically get a reaction of some type. And this is where the trickery happens, because when you get a nice, look at that 1 hour candle close up, and when you get a candle like that close, that's almost that's a very tempting excuse to be buying into this trade on the breakout. What did my moving averages look like? Okay. So here's the reason that I ignored this trade, because we had not even hit the 200 EMA, which is down here. Okay. That right there kept me safe. This is the piece I've been adding of late. Okay. 200 was way below this demand zone. And as you can see, I have another alert drawn up on a zone that's below this 200. So this wouldn't dollar yen as far, and it's given us, I do believe, a bullish signal, right? Yeah, +8. Okay, so we're getting a +8. Anything 5 or higher is a buy. So the next zone is actually going to be this one down here on a 4-hour time frame. Okay, over here, that's a nice expanded range candle out, left us a big gap. In fact, the gap was bigger than the range of the demand zone to begin with. I like it when gaps are bigger than the range of the zone. Okay, that tells me we got some strength. That tells me demand heavily exceeded supply. That tells me the potential accumulation starting point. And as the banks, as the institutions started buying, price ran away before they could potentially have filled the rest of their orders. So what do they want to do? Okay. They see a big boost like this. They see that we have not hit this overhead supply zone, I don't think. So that's a good sign. Yeah, whenever price comes down, they probably want to buy at the same price. Okay. They don't want to be buying at these expensive prices when they just bought at these cheaper prices. So this all falls in line a little better. Okay, even on a 4-hour chart, you can see the 200 EMA is just below the demand. So, but the action time frame is the 1 hour. I'm just looking at 4-hour for the zone, because you guys have always heard me say my favorite zones are the daily and the 4-hour. So there is my 4-hour. Now I just need the 1 hour time frame. I need to pierce the 200. I need the RSI to drop below 20. See, and that's the other thing. When we hit price up here in this zone, where was our RSI? Okay. It hadn't even hit 20. It hadn't even hit the 20 level yet. Now it did hit the 20 briefly right here on this candle here. But we still had not yet hit the 200 EMA. So it kept me safe. But yeah, if we can get, and this may not happen this week, this may be a next week type of thing, but if we can get price to come down and pierce this 200, bounce into the demand for collection of the unfilled orders, if we can get our RSI to go below 20, then that would probably be a good looking trade potentially for going into Monday. Okay, if all the parameters hit, I'd like to see a bullish 1 hour candle close, something like this. Okay. If we could do that, then I'll be going down to like a 15-minute time frame just to make sure there's no major supply zones in this immediate area that have formed. If not, it's a buy after the breakout of the 1 hour time frame, the 1 hour candle, the 1 hour bullish candle that's trying to show that momentum is breaking. If we do happen to have some supply zones in this area that look fairly strong, then perhaps we will look for the break of structure, the new impulse candle form. Okay. Remember, this would be an impulse leg right here if we broke this structure. So I would want to buy on a smaller time frame demand zone, maybe a 15-minute. Buy. This would be the trigger point right here for the buy. This is the trigger point because it's a retracement of the most recently created impulse leg. Okay, this is that confirmation entry I tell you guys about from time to time. And then obviously from here, we just buy. So that's our buy. This is my initial manipulation. And then this is the actual spot to buy, assuming we get a newly created demand zone bounce on this newly created impulse leg. Okay, this would be our newly created demand zone. And then if we don't have anything that looks good as a demand zone, then maybe you just pull up your RSI or your Fibonacci's and go from the swing low to the swing high of this newly created impulse leg. And now at this point, you can choose to buy a bounce of the 61.8, or what I like to do, get a little more of a cheaper price at the kill zone, which is why I have 2 red lines. Okay. Red signals death. So we put the kill zone at, which is a 71 retracement to an 88% retracement, okay, which is where I put that demand zone. So that's just a few ways of looking at it. Again, it all kind of depends if we get a newly created zone in this newly created impulse leg. It's a lot of steps, guys. I think I'm going to probably, some of you guys were asking me yesterday about some videos. I think I'm probably going to have to make a new video, incorporating everything. I know I showed you guys my old YouTube channel I created a year and a half ago. I say old because I've been featured on a couple of different platforms since. I built it, and then I got started with All Up Prime, and then I just kind of pushed it off the wayside since I was doing everything on the All Up Prime channel. But obviously now I've got my own channel. So yeah, I'll probably just go and create a new series of videos for fundamental analysis, sentiment analysis, and especially the technical analysis, because I have had some new filters added in since the last time I made that video. So that's my own homework assignment. I am waiting to hear back on the interview, guys. I did have my interview yesterday with 2 news desk managers. Okay, that happened a little bit later on after our stream yesterday. So I think it went well. I mean, I answered everything. I feel like I got all the answers correct. But, my goal is always, you can read us. Yes, son FX Pro. Yeah, good morning. Yeah, I definitely read you. But anyway, so yeah, I answered everything correct. I think I might have slipped up a time or two, but just because I'm my own worst critic, guys. I'm sure I did just fine, but I'm always my own worst critic. Oh, I could have done this better, or I could have said that better, or whatever the case is. But at the end of the day, the good thing is I had them kind of laughing, so that was good. So we'll see how that goes. Would like to get that position. Really would. Really, really would. No, I can see you guys just fine. They said at the end of the day, they want people that, has an opinion. So I have an opinion. I gave them my opinions, and they said that's what they were looking for. At the end of the day, we were kind of shooting the breeze, chuckling it up. So I think it went well, guys. So the next step is I do have a third, I think, final potential interview, assuming everything went well yesterday. And then we'll go from there. But so far, so good. Is that okay to question? Sorry, son of FX Pro. What exactly are you? What are you exactly asking? You can read us. Okay, nice. I thought. Oh yeah, the chat. Yeah, I can see everything on the chat. Yeah, guys, if you have anything you'd like me to look at, let me know. Definitely let me know. I'll be happy to bump anything to the top of the list. If you have any questions on anything, it doesn't have to just be chart related. It could be anything. Just let me know. But yeah, so far, like I said, today we've got unemployment claims. We've got our top setups. We did have a little bit of strength added to a couple of these currency pairs over here. Aussie yen got garnered a little bit more strength. Aussie Kiwi as well. So yeah, some of these top 4 have actually gotten a little stronger since yesterday. I think what I might start doing is what I was doing last year with All Up Prime. What I'm probably going to start doing is this, guys. In fact, I'm just going to do it right now. I've got my top setups, which is accurate as of 6:30 my time. I am going to copy these, and I'm just going to pick a chart. Okay, I'm just going to copy this list as of now, and I'm going to just go over here to probably my gold chart, because that's where I used to do it. I'm just going to go to my gold chart and paste it. And that way, this way, tomorrow when we come in on Friday, we can compare and contrast the list. What do you guys think about that? So tomorrow we'll be able to see where we're at with these scores and see, hey, did these scores increase? Did they decrease? Whatever the case is. I haven't lost anything, Son FX Pro. I'm still in a trade. I'm still in a euro pound long. So again, it's just kind of doing its thing. But yeah, as far as this, I'm going to do that because I used to like to do that just so I could see how everything is changing, guys. I mean, part of trading is seeing what happened today that changed from yesterday, and this is it. If we come in tomorrow and Aussie yen is giving us a plus 11, plus 12, okay, that's good to know. That's good to know. That gives us a little bit extra pep in our step when we try to buy at a lower price. But what happens if Aussie yen, we come in tomorrow and it's down to a 7, it's down to a 6? It's going the other way, right? That's good information to know too, because it might make it a little bit less appealing to be trying to get into a trade, because the most recent momentum is to the downside on the fundamentals, meaning we must have had a negative Aussie report or maybe a good Japanese report. Yeah, momentum, man. Momentum's everything. So that's what I'm going to do. I'm going to start putting this over here on my gold chart. And tomorrow when we come in, we'll compare the top scores with today's. I think it's a big piece of information. Now, the cool thing is he has on the Edge Finder itself, just so you guys know, there is a top setups history. And you can go on here and see what the scores were the previous whatever day you want to look up. And the cool thing is it actually gives us and you can change the dates for whatever time frame. I like to put like 3 months on there at a time. Just so you can kind of see, what price did when the scores were the scores. So obviously the middle is 0. That's neutral. Again, -5 to 5 is neutral. Okay, 5 or higher is bullish. So the idea is when we got scores, obviously 5 or higher, right? Then that's where we can start looking for buys. So yeah, this one, for example, gold. Yeah, it's had neutral scores, but it's had two scores at -1 or lower, and that's it. Look at it. That's gold for you. Okay. That's why gold's performing. It's obviously hanging up of late, profit taking and geopolitical firestorms, but it's just really cool to be able to see what happened when scores were there. Hey, are scores increasing like we had back here? And then you see the bounce upwards in price. It's kind of hard to see. I'm going to ask him if there's any way they can change this line chart to a regular candlestick chart. I don't know if there is or not, but I think that would make this a lot easier to read. And then on the flip side, okay, getting those downwards trending scores from day to day and seeing the downtrends that happen. So this, I just think, is a very, very, this is one of my favorite ways to look at scoring. All right, what we got over here? Question: am I scalping? So I do a 15-minute time frame version of what I do on the higher time frames. So when I look at to answer your question there, SunFX Pro, that's nice stuff. You see, that's making high one click, making right decisions. Yeah, man. Look. This Edge Finder, it saves me at least 2 hours of analysis every single morning. Just to be able to come in here and see. Initially, the first thing I always look at first is just, hey, what's getting scored, bullish or bearish? And okay, great. Then from there, see if I can time it on a chart. But then obviously looking at all the scoring, the COT data to see where the banks are positioned over here. Okay. Like right now, last week, they increased their week-to-week net change to 5% to the long side. Okay. This is good information to know since the banks are the ones making all the money. Right. Kiwi, they had a nice spike there. 10-year treasuries was up. And then going to the sell side, okay, they had the biggest sell-off on the pound, the NASI, the dollar. Okay. So this is just important information to know. And not to mention the crowd sentiment when we're talking put to call ratios, seeing if an asset has high put volume, high call volume, and it kind of mapping it out on a chart here for you. It's always good to know. This is a contrarian signal. Hey, if we have high put volume like we do for S&P 500, which I would say it's still neutral because it's in between the red and blue line, okay? But when we start busting up above the red line, that's high put volume. That means there's a lot of bearish bets in the market, in the options market for that asset that you're looking at. And that's a contrarian signal, okay? If there's high put volume, they're net short, so to speak. I want to go long. So that's that. And then retail sentiment. This is just the regular retail trading crowd, not necessarily options, but the regular crowd. Same thing, just being able to see where they're net long or net short. Okay. Euro dollar, they're net long 58%. So the average retail trader at home on their laptop or their smartphone are 58% long. So if they're net long, do I want to join the crowd or do I want to observe the crowd and do the opposite? I want to look at this as a contrarian signal for a reason to short this asset. And it just so happens euro dollar is on our Edge Finder top setups as a short, partially because of the retail sentiment. And then not to mention all the macro data that we have down here, guys, the surprise meters. But this is probably my second favorite chart right here, guys, just so you guys know. And by the way, a1trading.com, if you guys aren't familiar with the Edge Finder, you can always go there. Trader Nick, that's the stream I appear on after my stream. He's the creator of this, the developer. They've spent a bunch of money creating this thing. And it's got, I refer to it as Bloomberg Terminal Light. But anyway, this is my second favorite chart because it shows us the currency strength on a fundamental perspective. So currently the Aussie dollar is the strongest currency when we're just isolating the 14 different fundamental reports that we have over here on the Edge Finder. Okay. 14 boxes to the right, starting here. That's fundamental analysis. So Aussie is the strongest currency, guys, as we speak. The British pound is the weakest currency. And this is part of the reason I'm in the euro pound long, because look where the euro's at. The euro has exceeded expectations on 80% of its high impact events from the economic calendar, guys. Again, fundamental analysis 101 right there. So 4 out of 5 reports have exceeded. But if you look at the opposite side on the quote currency, okay, that's the pound, it's only exceeded expectations on 20%. So let's look at those currencies individually from a report standpoint. And this is why. This is the euro. This is why I bought the euro, guys. Look, these orange dates you see, these are all releases that have been in the last 7 calendar days. So we've had 5 reports, almost all of them, but 5 of 7 reports have come out in the last 7 days. And 4 of them beat expectations. Okay. The services PMI, the inflation numbers, CPI, the PPI as well, the producer price index, and the unemployment rate came in a tick lower. And then you had one report that was neutral. Okay. So it nailed the forecast. So when it comes to these neutral readings, they kind of wash themselves out because that's the market pricing in that. So what do? We don't skip it because it's not important. We skip it just to see the misses and the exceeding of expectations. So what I see here, if I look at 5 boxes where we had a other than neutral reading, 4 out of 5 of them exceeded expectations. So 4 divided by 5, guys, that's 80%. That's how we come up with the percentage. Fundamental. Sun Pro, you got some goodies on here. Let me get caught up on your chat. Yeah, so I haven't lost anything today. Still in that trade. Yeah, one click making right decision. Yeah, it does. It saves. I used to spend 2 hours a day, guys, looking at the Forex factory calendar and then going into here, unemployment claims just as an example. And then I would open up the history and then I would take these scores and I'd go back in time on a chart to dollar yen, dollar, euro dollar, whatever the case is, to see what happened the last time price did whatever it did. I used to spend hours doing that. And it just got to be to the point to where most of the analysis, while it was good to know and understand in the moment, a lot of it goes by the wayside because, maybe we don't have a good technical reading, or maybe something's out of whack. Maybe this report on its own is a very good report or a very negative report, but you look at all the other reports and maybe they're the opposite. Like in this case right here, let's just say I had a bearish report come out. Let's say the GDP report. Well, we already had that one. Well, these are all fairly recent, but yeah, let's just say for argument's sake, the next time let's say the services PMI comes out bearish. Okay, that's obviously not a good look. Or the PMI, the manufacturing. let's say the growth numbers. Okay, either one of these three reports, if they come out bearish the next time, well, let's keep it to the PMI. Actually, the GDP comes out bearish, guys. Well, that's negative for the currency, right? But we have to remember what happened in the recent past. We had more bullish reports come out than that one bearish. And then obviously you do have the bearish retail sales, right? So that will skew the percentage, but it'll still remain, what, 60 something percent, 70%? That's still overall strong. So do we want to be loading up on selling a currency that had one bad report and forget that we had all these good reports come out in the recent past too? No, that's where I used to be wrong about this, because I would just focus so hard on the one report in front of us. Like today, I would focus just on this unemployment claims and think, oh, that's the make or break. When in fact, you got to look at everything as an aggregate. I mean, if we look at the US dollar, okay, we're at 61%. Why is that? Well, because just recently, let's see, what did we have recently? So we did have a negative, let's see, wage growth. We had a bullish ADP number come out within the last 7 calendar days. We had a bullish PPI. We had a couple bullish reports up here for the PMIs. So we had like one more bullish report than we did bearish over the last 7 days, because we were at a 53% down here, but now we're up to 61. So even though we had like 2 or 3 negative reports, our score still rose for the dollar. Right on, Zambezi. Yeah, I'm probably going to be talking to Nick and maybe reevaluate my schedule. I might see. You guys tell me what you think about this, since I got a handful of you on here. I set out to do 6:30 to 8 my time, which is Central Time, but I'm definitely running into the start of Nick's stream. So what I might do is start doing something like 6:30 to basically 7:15, about this time, which is when Nick starts, and then I'll take the other 45 minutes and just add it on to after the Nick show, Trader Nick show. Like maybe give everybody a 5-minute break, and just jump right back on the same stream that we're on right now. And that way I can catch some other people on the West Coast at that point, and like Hawaii, places like that this time slot's too early for. So basically have a 45-minute session, have the A1 trading session, and then have another 45-minute session for me after all that's over with. I think I might start experimenting with that. So yeah, definitely always encourage everybody to go to A1 Trading site. There's their stream as well. If you haven't done that yet, just go to YouTube and then go over here, right here, Trader Nick. So just click on Trader. It's at Trader Nick, and then you can just click on his live stream. And yeah, he does different times throughout the day, guys. So if I go look at the schedule and click on a1trading.com, and this is of course where you guys can find the Edge Finder as well, and the stock box if you're looking at stock trading. And just click over here on the A1 live stream. And then right here, you'll see the daily schedule. So like for me, I'm at 10:45 Eastern Standard Time today. So that's probably what I'm going to do. I'm probably going to just break my show into 2 pieces. That way I'm not overlapping his show. That's what I don't want to do. I don't want to overlap his show, because I tend to come on like towards the latter part of the show anyway. So what I might do is do my piece, my 30-minute piece, and then turn around and do the rest of my 45 minutes from my 1.5 hour stream. What do you guys think about that? Okay, what else we got up here? What happened yesterday? Sun FX Pro. You talking about in the markets? Well, generally we had a risk on day, because we had a little bit of a further decrease in the indices, but then we had some bounces back up, some partial bounces upwards. So it looked like we caught a bid at some point, and bounced back up. The metals kind of sold off a little bit. Bitcoin, my gosh, did you guys see Bitcoin? Bitcoin recovered nicely. Okay, another risk on asset. Okay, look at here. At the start of yesterday, let me see here, where are we at? I think I might have my times off on this, but anyway, yeah, we ended up getting. Let's see, is my times right on this thing? So yeah, we'll call it midnight Wednesday or Tuesday going into Wednesday. Just had a big risk on move. Hey, Bitcoin's a risk on asset, right? Gold, silver kind of went sideways when we're talking about the indices. Okay. We bounced off this former support resistance line, this blue dash line, straight up. It kind of sold off a little bit in the Asian session, it looks like, but we had quite the risk on move. Then the dollar itself just continues. If we're just isolating the Dixie, okay, it got a little bit of a sell off, but then we got another boost in the Asian session. Look at that. Asia said, "Oh hell no, we're going back up." What about the VIX? What about the volatility? Yeah, we got all the way up to the, what was that, 28? Yeah, 28. And you guys remember I kind of drew up this green line over the weekend before the markets open, just to kind of guess. Look at that. I assumed we would get a spike on the fear index. I call it the fear index, but the VIX up to these swing highs up here, this like double top, and before getting a little bit of a retracement. Look at that. I think that's exactly what happened. Look at that. That's a pretty good guess, wasn't it? Bounce up. Okay, it went a little bit higher than I guessed, but then we got the sell-off. All right, I don't want to say sell-off, but the relaxation in the markets. So not to toot my own horn, but that was a pretty good guess, I think. That was a pretty good guess. Pretty good guess. Yeah, Zambezi, no worries, man. I encourage everybody, focus on Trader Nick. He's the one. He's somebody I've been following for several years now. I just didn't really. When I started this time frame, it was because of the schedule from when I was with Olap Prime. That was the schedule they recommended. So when they ended the program, I just automatically kept the same times. And now I'm starting to realize, oh, wait a minute, I don't want to be overlapping him. So I think I'm going to start doing that, guys. More details to come. I need to talk to them about it, because we tend to plan our schedule out each, at the end of each week. His producer James writes up the schedule, so I'm probably just going to see about possibly taking over the last slot of the day. That way, I can just seamlessly run into my next stream, my second half of my stream. So anyway. Let's get back to some more goodies here. Let's go take a look at Aussie Yen and Aussie New Zealand. Aussie New Zealand, Aussie Yen. Aussie New Zealand, Aussie Yen. Where you at? There you go. Aussie Yen. Okay, so I have an alert down here on this. There's a demand on I do believe 30-minute. Excuse me. So 30-minute demand. Okay, we had a push up. We broke some structure. Oh, no, we did not break a structure. Did we break that structure? Can't eyeball that very easily. Did we break that structure? Barely. Yeah, we wicked above it. We didn't close. We didn't really close above it, though. Did we? I guess we did technically close above it. So there you go. Structure broken. Structure broken. So this demand zone that was created, broke a structure. So yeah, automatically my eyes are drawn to that demand zone. Indecision candle left a gap showing that demand heavily exceeded supply, which also, of course, broke the structure. So I'm just keeping an eye on this zone first. Now, it's not my favorite looking setup, but it is a setup nevertheless. Okay. Yeah, all these wicks down here are just kind of throwing me off. I got to be honest. There's a lot of like push downs and with immediate buys up. Obviously, we had the gap after the on Sunday when the market opened after the first strikes, right? The first Iran strikes. And We also had some US data. I do believe that was that spiked down. So yeah, I'm keeping an eye on that. I mean, it's a decent looking zone. I think there's better ideas, to be quite honest. Now, this is the stronger of the bullish pairs when we're looking at the scores. So that's the main reason why I'm giving this like less appealing zone the time of day. Talk about this 30-minute. On a 1 hour time frame, I still have my 50 EMA over my 200. That meets my rules. Price has pierced the 200. So that's a box checked. Now, the only other piece I need, if I buy this demand, is I need my RSI to show a severe oversold reading of 20 or less. And you guys can see we're not even anywhere close to that. We're about 60s. We're in the 60s. So once price gets down here, this is the last piece of the puzzle. Okay. Once we get down to here, I've got to have RSI go below 20. If I see it's oversold, same thing as the last one I showed. Give me a bullish candle close, a 1 hour candle, or a confirmation entry to the top side. So that's that. Just need some more information. That's all trading is waiting on more information to come in. If we can access that, we study that kind of stuff that really, if to us, as can you, I don't know what you're saying, FX Pro, might reword that. If you're still here, still around. But anyway, that's Aussie Yen. We'll take a look at Aussie Kiwi as well, which is our second most bullish asset. Aussie Kiwi, there you go. Now, I like this zone. This is a lot more prominent, a lot easier to spot. Got a 1 hour demand here. So indecision candle, but it actually favored the bears on this, guys. Again, green candle, you would think would be bullish, but it's not. It's bearish because we had a big wick that went higher up, and the bears stepped in and said, no, thank you. We're going back down. Closed under the 50% of the range. Green candle, yes, but it is a bearish candle. So from there, regrouped, left us a little bit of a gap. More importantly, we had some volume spread analysis candles grow in size. Nice yellow candles coming out of that zone, showing that there's higher than average trading activity, institutional type activity at the creation of the zone. And then not to mention, it kept going. It broke some structures. I wish the gap was, well, it really didn't leave that much of a gap. So yeah, this could be the downfall to this zone, because this by definition is the leg out candle, this expanded range candle, but we didn't get a gap. We just didn't get that much of a gap. I mean, this is the tiniest gap I've ever seen. So that's the tiniest inefficiency that I've seen. Okay. So that may negate that. Just depends on what happens when price bounces into the demand. Do I remain 50 above the 200 EMA? Do I bounce RSI down to 20, showing it's oversold? Do I get some VSA candles start growing? Give me a yellow candle. Do I get a bullish engulfing candle? A candle with a wick underneath it? Is it breaking structures? Is it creating itself as a new impulse leg? If so, okay. Perhaps that would help me to oversee the fact that we had a very little gap. So I've got an alert there. Yeah, same thing. Just need more information. And then, by the way, what do we got? We got a little bit of a downtrend going on. Okay. Getting that little bit of downtrend right there. So perhaps when we bounce into the zone, just another technical thought here. Start getting some price action like that. If we get a broken structure, a broken trend line right here on this middle part of this leg, okay, great. I don't want to buy the breakout because that's what retail traders do. I want to wait for a discount. Important part right here, guys. I know a lot of people use trend lines, but if you're going to use a trend line, look at it from this aspect. Did this brand new impulse leg, because it broke a structure to the left, right? In fact, it broke two, but we'll just, all it needs to do is break at least one structure. If we break this structure, hey, did we leave a demand zone in its wake underneath on a smaller time frame? Okay. Or 61.8 retracement of this impulse leg. Remember, impulse legs are everything. For me to get into any supplier demand zone, guys, it has got to be an impulse leg if you take a step back and look at it on a higher time frame. So just to add the layers of confluence, the odds enhancers, okay, we had this downtrend line getting touched a whole bunch of times. Again, when price breaks that, you're going to automatically have a lot of buyers stepping in. Okay, let's drill into this for a second. So you're going to have buyers stepping in right here just because it broke the structure, it broke the trend line. And you're going to have buyers buying in all throughout here because they don't want to miss out. This is a FOMO trade. Okay, only to see price get beat right back down, take some of these guys out, collect their stop losses, and then we bounce into a newly created demand zone. The banks use that liquidity from the unfilled orders as well as the stop losses to get a bounce and push. So this is the buy. The demand zone itself is always the buy. It's always the reason to buy. Every time you guys see me get in an order, it's because it's bounced into a demand zone. So that is that on Aussie Kiwi. What else we got? Let's go take a look real quick at the financial juice. I just want to refresh this, see if we have any major events, guys. As always, we do have obviously bombs being dropped left and right over in the Middle East. So it is especially nice to be able to see things like financial juice, just to see if any major, hey, let's be candid. Have any more high-level officials been dropped in Iran or even other countries? Is there any new news over the Strait of Hormuz, right? Where, 20% or 30% of the world's oil comes out of? Something like that. Okay. Getting that supply shock to oil. And if you don't have financial juice, because, there's obviously a little bit of subscription, which I think I'm still under, because I had mine through all the Prime. I'm still logged in with them, so hopefully I stick with it. But otherwise, guys, you can always just simply look. A couple things I wanted to tell you guys. So yeah, Yahoo Finance, you guys could obviously go there. You'll get a lot of business type stuff, markets. But if you have Twitter, this is something else I would recommend. Just as far as seeing the progress of the war. Go over here and start following people like NATO and all the branches of the U.S. military. Okay, Space Force, the Marines, Secretary of War, guys, the Air Force, Department of War, Coast Guard, National Guard, U.S. Navy, guys. They just blew up a Iranian ship yesterday, first time since World War II. I do believe I read that or heard that. First time since World War II where a ship was destroyed by a torpedo. Stuff like that you can find on the Navy site. But the main one, I think, to follow is U.S. Central Command, guys. Because you guys have probably already been on the socials and seen a whole bunch of fake crap, fake stuff being blown up and all this. You got to get everything fact-checked. But this is straight from CENTCOM, straight from the Central Command. If you guys are interested to see, hey, I heard that this person was bombed or this facility was bombed. Well, you can just go and verify it straight from the horse's mouth. Okay? So that's what I would recommend, just so that you're not going down a rabbit hole of regular Joe Schmo people creating fake stuff, guys, because we all know how AI is. So, yeah, I mean, if that's your kind of thing And then Scottie Pippen, just for good measure, not because of his trading advice, but because it was a good basketball player. Scottie Pippen, guys, for those of the that may not know, where'd he go? Yeah, he was the wingman with Michael Jordan for the Chicago Bulls when they won their 6 championships in the 90s. He's actually gotten into crypto trading, so it's kind of funny to go on his page sometimes because he will tend to repost other people's stuff, and people are like dogging him like crazy, saying, "Well, you're grifting. You didn't come up with that analysis. You just used somebody else's." Well, big deal, but it's just funny it's cruel, but it's funny to see people kind of dogging him because of the crap he's posting. But anyway, that's neither here nor there. Good basketball player. I watched him growing up as a kid. That dates me a little bit, by the way, guys. I am 43. Okay. I'm right there in the time frame where I was analog and digital all at once. So the best of both worlds. I got to admit, I kind of missed the analog years to some point. We're inundated by the digital age, technology, which is all good stuff. It definitely helps further life and the life, everything, lifestyle and all that. But sometimes it's just nice to step away from technology, which is why we have the weekends. Good chance to break away and get away from it all. So anyway, Aussie Kiwi, that was that. I'm going to look at a couple more of these guys, and then I'm going to hop off a little early. Again, I'm going to get with them about seeing what we can do with the schedule a little bit, because I don't like running into Nick's. I know Nick's stream is going right now. So anyway, we'll just look at a couple more of these. Dollar yen, we already kind of looked at. What about the short side? So the pound dollar and the euro dollar, guys, these are the shorts I want to look at. Now, pound dollar is giving us the strongest dollar-based short, but then we got pound Aussie that's a point weaker. So let's look at those. Let's look at those in this order, actually. Pound Aussie shorts. Do I have a signal? Do I have a supply zone? Why am I going down? I need to go up. Do I have a supply zone on pound Aussie to look for a possible short? Okay. Daily chart on the right. My 8 is under my 21 EMA. That's a good sign. That also matches the Edge Finder bearish signal. Looking here at the 1 hour chart, you can see I've got my 50 below my 200 EMA. Check. You can see that price has come up actually already and touched. Look at this crap, guys. Look at this. Look at this perfect signal we had on Tuesday. See this 1 hour supply zone right here? Do you see that we pierced the 200? Do you see that we bounced into the supply? And then what happened? The bottom just fell out of it. So that was an absolutely perfect supply zone to short in. The problem was it moved too damn fast. Let me zoom into that. See, in order to get a good 1 hour close, we had to go back to here to short. Well, by the time we did that, we skewed our reward to risk management. So let's just say, and oh, by the way, RSI went above 80. So that's the other thing. We were severely overbought. So what happened? Big wick bounced into the zone. We ended up closing here. So there's our 1 hour bearish candle close, which is what we want to see if we wanted to short this area. But if you look at the reward risk management, it skewed it because we have to look at this demand zone down here. And that's only, well, not only, I mean, it's 140 pips away. So that provides a very good reward. But what's 140 divided by 2? So I can look for a 2-to-1 reward risk. That's 70 pips. Where's 70 pips take me? Right about here. So that right there would have been where I would have had to get my stop loss just to maintain at least a 2-to-1 reward. But the problem is there's more wick. There was more wick above it. Okay. And I would have wanted to take into account the rest of the supply zone. So I would have wanted to put my stop loss up higher like this. Well, if I do that, that's the safest form. That's the safest way to do it. But it's also creating a gigantic stop loss. Think about it. That would now be 120 pips of a stop loss. Now, pound Aussie does move a lot because it does have an average true range of 150, meaning it does move 150 pips on average per day. So it's one of the it's probably at the very top. I think it is at the very top as far as the biggest volatility currency pair. 150 pips in a day, that's a lot. Just for a little context, dollar yen moves about 120, 127. That is the highest US dollar based pair. Euro dollar, okay, it's a lot lower. It's somewhere around 60, 70 pips. Euro pound, the trade I'm in right now, only moves about 40 pips a day. So quite the difference in ranges. Those are good things to understand, especially when you start getting deeper into trading, if you don't already. I wouldn't worry about it too awful much, especially if you're a brand new trader. All you really want to start focusing on right now is, hey, what is a candlestick and how does it operate? How does the CPI report affect the dollar when it comes out bullish or bearish? Understand the basics of that. But at some point, you're going to want to understand the average true range, because that's the report that tells you which currency pairs move like a Lamborghini, or do they move like molasses, like a Ford Pinto, like the Euro pound, which is the one I'm in now. It moves like molasses. It moves slowly. So at some point, you'll want to understand which ones are fast, which ones are kind of like regular, or which ones are slow. Okay. Are you driving a Lambo? Are you driving a Porsche? Or are you driving a little pea shooter Pinto? By the way, guys, I got to say, it just got foggy outside. There's another complex building like, I don't know, 30 meters ahead of me, and I can only see about half of it because of the fog that just rolled in. I can't see my streets. I can't see the lights. It's starting to look like Silent Hill out there. So hopefully no zombies start coming out to my courtyard and start attacking us. But anyway, pound Aussie. So yeah, just looking at this, as far as supply zones go, now we did bounce into, so that was that one, guys, just to put a button on this zone up here. So obviously trade would have worked out perfect. Unfortunately, it just moved away way too fast on a daily chart. And I think even on a 15, because somebody asked me about scalping earlier. Okay. So 15 minute, 10 minute, 5 minute. I mean, if I get a good, it depends. My goal is to not go any lower than a 15-minute chart. But I've been known to go to a 10-minute, to a 5-minute. And as long as all my rules work out on those time frames, as long as they're in line with the higher time frames, then yeah, I'll dig into some of those trades. So a little more of the scalpy type trades, be in those trades for a few hours, something like that, a couple hours, a few hours. But for the most part, 15 is the lowest I prefer to go. And even if I look at this chart on a 15-minute time frame, that's that same supply zone. What happened? I got a 15-minute bearish candle, but look, again, it just moved way too fast. Way too fast. So that again skewed my reward risk, because I have to pay attention in this demand zone. Conventionally, people will say, okay, if I sell up here, then I want to take my take profit all the way down here at the bottom, right? Swing low. But I focus on the zones. So if I go down to a 2-hour, you guys can see clear as day, we've got this basing candle, this indecision candle. Why? Because we have wicks on the bottom. We have big wick on the top. And it closed at the 50% line. So it closed in the middle of the range. So that's pretty much an indecision candle, which is the basis for a consolidation, which is the basis for a demand zone. And then we get our gap away. We get our break of structures. That creates a new zone of demand. So that creates a new potential spot for price to bounce back to the upside. So do I want to be taking a profit down here knowing that I've got unfilled order potential that could push price against me? No. So if I were to have gotten into this trade, I would have wanted to have put my stop loss, my take profit, guys, right about there. I want to buy to cover just before we bounce into those unfilled orders. Okay, think of the pitcher's mound right here. If you guys understand baseball, most of you guys, I'm sure everybody does. The pitcher pitches the ball. And what happens? When the ball gets, okay. And by the way, this is your batter down here. Think of the zone as a player standing in the standing in there, the batter's box, waiting on the pitch. So what happens? Here's the pitcher. He pitches the ball, and the ball comes into the strike zone, and the batter smacks the ball to the upside. Okay. So if I know that, do I want to take a chance of the batter not swinging at the pitch so that price can come down to the swing low? Or do I want to be prepared in case the pitch comes into the batter zone and then the batter swings his bat, smashes the ball upwards? Okay. That is why I like to take my profits, or at least move my stop losses to break even, or whatever the case is. That's why I at least want to start looking at this as the spot to take the profit, because I don't want to have price come in, the batter smack it the other way, and then it take away all my unrealized gains. Okay. That's just the reality. So I look at it a little more conservative. I look at it a little more realistic, because I know that we could get that bounce. And as you can see, price actually came close to the demand zone and moved away before it even touched. So this zone is still intact because it has not yet been touched, hasn't been mitigated, but got close. So that would still remain a demand zone a take profit for me, assuming I would have shorted up here. But again, it just moved too fast. Again, just to wrap a bow on the scalp question, it just moved away too fast on that first 15-minute candle. So hope that helps. But as far as what we have now, well, we are currently bouncing into this 15-minute supply zone, as you can see. Yeah, well, I mean, if you're playing by the rules, let me check one thing real quick. 1 hour. Okay, 1 hour. So the 1 hour has bounced into the 200 EMA. Let's think about this for a second. And it's just now bouncing over to 20. So there you go. See the 1 hour had not yet hit over the 80 overbought line when price bounced into that zone on a 15-minute time frame. So that right there kept me out of shorting this move here. Going back to the 15. Yeah, it hit over the 80 on this time frame, but I needed to do it on the 1 hour. Me personally. Remember, higher time frames always trump the smaller time frames. So on a 1 hour, there's our 15-minute candle we was just looking at. We had not hit the 80 level. We only went to 76, 77. Now we're bouncing into 80. So now we got some decisions to make, because we've already chewed through the rest of this supply. And now you can see the 50 is actually starting to cross the 200 to the upside. So that's a picture I don't necessarily want to see, but it hasn't closed yet. So I don't know. Maybe if we get like an immediate bearish candle, we could maybe look at this all on a much smaller time frame. Let's measure it out. Okay, 90 pips. What's 90 divided by 2? That's what? 45? 45 pips would be right about there. Okay, so if we could get a bearish candle, so this candle is obviously big and green, so it may not even happen. But the only thing that would get me out of bed for this potential short, because we did actually bounce into a new supply zone. Now we've pierced through it, but we're still at that zone, this newly created zone. Okay, this is the only way I would possibly get into this trade is if now we form a big red candle and start going below. break this structure of this most recent candle. So that would probably be my way into this trade as a short. And that would keep my reward to risk at least a 2-to-1. And it would look good. But again, this may not give me a chance. It may just keep going up. If it goes up, say la vie, no worries. Haven't lost anything. But I'm just telling you, it's got to meet my rules, my criteria. I need this red candle like this. If I get that red candle, we buy the breakout of it to the downside. Just like that. Okay. So anyway, guys, I think that's about it for the day. I'm going to hop on. I got a couple things I got to do. I'm going to hop on to Trader Nick's stream again here later on at 10:45 Eastern Standard Time. Okay, so that's 9:45 my time. So yeah, go ahead and hop on over there now. You got a lot of good speakers over there. Okay, you got Trader. Actually, right now you got Chris Pulver, and there's probably the both of them. So go check them out. And then again, you guys can find me there here in a little while. But if nothing else, I'll see you guys tomorrow. Okay, same time, same place on a Friday. Fridays are always good days by default. Okay, so let's see what we got going on for Friday. I will be back at 6:30 a.m. tomorrow, where we have a big day, guys. Get ready for this. Okay, for tomorrow, about this same time, we got earnings coming out. We got 5 red folder high impact events for the dollar. So hourly earnings, core retail sales, the all-encompassing non-farm employment change. Guys, this is the biggest report of the day. This is the account killer right here. Okay, this is one of the biggest reports that we have coming out. And then we have retail sales and unemployment rates. So we got a slew of stuff going on. You're definitely going to want to be sitting on your hands tomorrow at 7:30 my time, 8:30 New York City time, Eastern Standard Time, because this is going to flip some stuff around, ladies and gents. Get ready for that. But again, we don't have to worry about that for another 24 hours. And then last thing, because we did have the unemployment numbers come out. Okay, so just to finish off, guys, we did have unemployment come out a little bit, just a tiny bit, tiny bit good, if that makes sense. Forecast was 215, but we only got 213. So that's 2,000 less people that got claims, meaning that's 2,000 more people that are working than was expected. So that's a good thing for the economy. Not a gigantic deal, though. I mean, you got on a 200,000 number, it was only a 2,000 difference. So it's not a gigantic change. That's why it's basically a neutral color on here rather than green. So there you go, guys. Continued dollar strength. 60% plus of its high impact events have exceeded expectations. Dollar strength today, guys. So with that, have a good day. I'll see you guys tomorrow.